Tell us about a couple of examples on how merchants almost lost their ability to process or had their funds held, and you were able to step in, get those funds released, and save those accounts.
I had a client last year at this time. They had two holds with Stripe that were totaling close to $2 million. Now, obviously, that put a damper on their scaling plans, and we were able to come in and de-risk and get a majority of those funds out within a 3-week span. They're my clients today still. We do consulting for them on a monthly basis, and we ended up setting them up on new businesses, and they have completely clean operations, no hole. You need to have a business plan, and you can't just come in and wing it. Your website's got to be very organized and thorough, but you're going to lose like 20% of your clients.
Okay.
Because whenever that U.S. consumer, their issuing bank, is interacting with a foreign entity, and like you just bought coffee down the road at Starbucks 5 minutes ago, they'll flag it as fraud, even though if you have money in the account.
Welcome. We're here for another episode of Linked2podcast, and today we're joined by Michael Ramsey of Compaytence, and as usual, we've got Cosmos with us. So, Michael, maybe you'll kick it off by telling us a little bit about yourself and the company.
Yeah, so my background, came from a more traditional corporate environment. So I spent north of a decade at Wells Fargo and then 10 years in the payment space. So it was quite a bit of time there. And then I got antsy and wanted to go more into the startup route. And so doing that, I worked for a couple different ISOs and then moved into an international payments company called Transformate Global Payments. So did that, ran that company as the VP of sales for a couple of years, and built out really the North American footprint. So that was more foreign exchange, cross-border payments, just overall just having like a more optic into just global finance in general. Then from there, I moved to a company called Reach, which specifically worked with like e-com sellers on their overall operations and payment strategy as a merchant of record. Mm-hmm. And so really gravitated towards that and ended up partnering and working with a partner that used to send referrals to Reach. And it was the founder of the company. His name is Lars Spunk, and ended up joining him a couple years ago. And then we've just really just grown this business together. So it's been a great journey. And, what we do now is we focus on working with online sellers on their overall operations, payments, and risk strategy. And so there's a massive gap in the market for clients that are, starting up, and even proven sellers that, do $1 million in revenue or even $2 million in revenue on a monthly basis. There's a gap in just their payments operations risk and how they manage everything. So we're there to really help fill that gap, give them the insights of a compliance expert, someone that's been in payments, give them setups with payment processing, overall risk mitigation, operation controls, and allow them to do what they do best, which is market and scale the business. So that's what we've been doing. So I kind of went the other way, corporate, and then downsized to a real small, nimble startup.
So it sounds like it's a little bit of a fractional approach for that specific talent.
Yep.
Okay.
Yeah, exactly.
Very interesting. Very interesting. Big need for that.
Yeah. It's been a massive challenge for online sellers to really, again, focus on what they do best.
Yeah.
And not have to worry about I call it the boring stuff to them. They don't want to worry about payments issues and holds and payout stops and trying to find the right provider. We kind of do that boring stuff and make sure that it's all in line and they do what they do best.
That's great. Now, how did you meet Cosmos?
Yeah, we met actually at SEAA in Orlando this year, through a mutual contact with Market Disputifier. So told me about him, and we just kind of hit it off, right? So
signed a referral agreement like same week.
Yeah, I think it was within like a week of us meeting, we ended up connecting, understanding kind of what they do, and it seemed like a really good match. So kind of went in a pilot format, and since then it's been great, really good.
Yeah, you've been a great partner to work with. You guys definitely hold the hand of the merchants extremely well in navigating all the different complexities and on the compliance side, particularly for merchants that have started in the EU and want to start a corp in the US. Mm-hmm. So I guess that comes to a good question. For these merchants that start in the EU or they're a startup in the US, what do you see as some of the most common mistakes or pitfalls that they run into?
So, it depends on the industry and the vertical. I think a lot of clients that we do work with, if it is a startup client, we're partnering with a lot of different like academies and e-com kind of gurus that help, new students kind of start up and find their product, their niche, and sell. And I think for them, what happened previously is that you can kind of run a lot of tests and iterate and change kind of on the fly dynamically. Now you really have to be focused and narrow and niche with your product set, and not just kind of taking this testing approach. It's more of a focused strategic approach. And, I think by doing that, it allows the merchant to really narrow that market down. And every market's different, right? If you're selling in the EU, there's various cultures within the EU. Germany has higher return rates, and, there's various different kind of product sets that fit each market. So we've been able to kind of help guide them. And I think the biggest pitfalls are just not really understanding your market, right? You're trying to sell to a US-based consumer, but maybe you had success again in, let's say, Italy, for example, or Australia. Well, the market dynamics are different, right? Customers' behaviors are different. They're going to respond differently to different product sets. So that's where it's not all cut equally across global markets. And I think really not understanding their payment stack, right? So they come in, they'll use like a Stripe or Shopify. They're not using chargeback alerts. They're just kind of winging it as they go. And that's where problems happen. So I always look at it, it's like building the foundation to your house. It's like you want to have a good go-to-market approach, a good kind of focus on what problem you're solving with your products, and also, having some good baseline knowledge of just your overall payments operations.
So when you say get the merchant processor ready, what are the three keys that they need to have before applying for a merchant account?
Yeah, so I would say the requirements vary to a degree depending on the region. Now, if we're looking at it US specific and working with you guys, there are the KYB or KYC requirements, right? And so typically if you're setting up, you need to have a full entity within the US. And I think the misconception is that as a foreigner, it's super hard to get set up in the US. It's not. We do that for merchants and help them set up. You also need a bank account, right? You got to have an active bank account, and you want to have some type of go-to-market strategy, right? So if you're just starting up, you need to have a business plan, and you can't just come in and wing it. Your website's got to be very organized and thorough. And so there's different components, but I think from like a compliance perspective, you got to have the entity, you got to have physical presence in the US, and you got to have certain requirements to be able to actually get that processing account.
Have you changed your approach on setting up these accounts since VAMP has come into play? Maybe tighter customer service requirements or marketing, or kind of how have you navigated that?
Yeah, it's been a test in the last like 30 to 60 days, I would say, for a lot of merchants. And again, we're very dynamic. We do have other partners that we work with, but you're seeing this motion now where there's a request for a lot more information, right? Which is very normal, which I think in any sense, you need to have supplier agreements if you're working with, a supplier, or having local fulfillment, making sure that you have cash in the bank, right? And I think payment processors, they're not venture capitalists, so they're not going to just set you up and you just have no money in the bank or operating capital, because that's a recipe for disaster. And then also mandating alerts and things around that. So, I think you just have to level up as an owner and take things a lot more seriously, and also come with like a very solid business plan and the operational mechanics. So I think there's just a request for more information than before, and you really have to be thorough in what you're providing. And I think just expect it. Like that's just kind of where the market dynamics are at right now.
So on that subject, looking in your rear view mirror, has that been better or worse as an impact on merchants than you expected it to be?
Yeah, there's a varying degree of acceptability now, I would say, from a processor acquirer standpoint. I think it's worse in terms of the information required for the merchant. The barrier of entry has been leveled up, I think, from that perspective. But I also think it's good in a long-term perspective, because it's going to require a lot more rigor around operational controls and compliance, which, obviously is we offer that, so it's great for our business, right? But it also it requires the merchant to learn, right? They need to be aware of how to manage front-end fraud and ensuring they understand what TC40s are, and being able to segregate between, a fraudulent chargeback versus like a product quality chargeback, or shipping issue chargeback, subscription chargeback. So, I think it's going to require merchants to have a more healthy understanding of like their operations and just their overall financial flow. So, harder in a sense that there's more information. And I think just the barrier to entry is going to be higher, but it's going to force merchants to learn, right? It's going to require them to level up, which I think ultimately for the ecosystem, it's going to be a lot better.
Yeah, so plus in the long run.
Right.
Okay.
Yeah.
So I guess tell us about a couple of examples on how merchants almost lost their ability to process or had their funds held, and you were able to step in, get those funds released, and save those accounts.
Yeah. So that was kind of our main product off the shelf. So we help with reserve recovery and help merchants that get funds stuck at Shopify, Stripe, PayPal, really any processor. We will come in and de-risk and help them turn into like a high-risk business in the perception of the provider to a low-risk business. But it requires like operational like updates and controls, policy updates to the website, upgrading their CS team, response times need to be changed. There's a lot of art that goes into it. And then there's the science, which is, ensuring that you have fraud alerts or chargeback alerts, implemented, and just, staffing's in line, right? There's the art and the science. So, there's a lot of examples of that. I think I get a ping almost daily on, hey, I have my funds stuck here, or I had this happen with a provider. So in terms of like a specific one, there has been several. I had a client last year at this time. They had 2 holds with Stripe that were totaling close to $2 million. So we had to come in, and obviously that put a damper on their scaling plans. And, we were able to come in and de-risk and get a majority of those funds out within a 3-week span. And ultimately, they're great operators. They're my clients today still. We do consulting for them on a monthly basis, and we ended up setting them up on new businesses, and they have completely clean operations, no hold. So that's probably like the biggest win. We got money out from Stripe, and we also got money out from PayPal. There was more as well. So they have been like, how would you say, kind of our tier 1 client, I would say, because they were able to learn from us through all these audits and operational changes and entity kind of cleansing. And then now they're running fluidly and there's no issues. So that's been a really good experience for both our clients.
That's
for
a
us.
huge value proposition.
Yeah.
Huge. It's amazing.
I think you worded it very well as well, that it isn't art form, it's a science. And being able to educate these accounts, because just what is a TC40? What is a TC15? If I'm starting a clothing brand, I don't know what these things are, and I don't care.
Yeah.
Right? So having somebody that can help navigate all of the compliance regulations that are constantly changing at the same time is, like Richard just said, a huge value add.
Well, it's the new economy. There's a partial player for this and for this and for this, whether it's accounting or whether it's this expertise that you're talking about. I mean, it's how easy it is to deliver services now. It's all been facilitated by the cloud. So it's really great.
Yeah.
Great example.
Mm-hmm. And you guys are providing education as well as a part of your consulting?
Yeah. So, depends on the program that the merchant's in. A lot of it requires collaboration, right? We're not going to work with a merchant in the likes of a reserve recovery. And we have it's called a risk assessment program. There's rigor that we wrap around this. So we have a very thorough kind of like business diagnostic questionnaire that we ask and send, and it takes them a couple hours to do it. They're going to need to work with our team, and we have a data team internally that really collaborates and ensures that all the documentation is in line, and we audit the website. We're changing things for the business to showcase them as low risk. And so there's a lot of collaboration required. Right. And if the merchant's just sending it to us and saying, fix it, and I'm not going to change, well, you have to change in order for your business to change, right? We have this problem. It's like going to a doctor, your knee hurts, but you're not going to listen to the doctor to fix your knee because you're, running on it every day and your knees are shot, right? So you can't do that every day. You have to change your behaviors to get the desired outcome. So we really help them and work through this with them in a more collaborative effort. It does require work. It requires them to change. So understand policies and procedures. And we have that optic into the processors to ensure that this is what we're seeing, and these are the new things that are changing, and particularly with VAMP, and we're letting them know. So they're getting a lot new information from us, like live on the ground.
So besides the value that you add on the consulting side, reserve recovery side, the education side, can you tell us a little bit about the account setups for the U.S. versus the EU or Hong Kong, and how those processes differ?
We set up accounts globally. So our main kind of corridors are EU, UK. We can work in Canada, US. We do work with clients in Dubai, Hong Kong. So we are global. The requirements in the EU and UK, there's definitely is more, they're more rigorous, a little bit more technical in terms of just the overall like regulatory environment there. Where I would say there's more flexibility, and it's starting to change, is in Hong Kong. There is kind of this, I don't know if it's like a rude awakening, but there is this clamping down and more, I would say, rinsing of some of the clients that they used to work with before, like general drop shipping, or again, not having like a real clear product like core or set that you're focused on, and trying to start and just sell it everywhere, right? So the US definitely is more flexible, I would say, in my opinion, with online shops. It just seems to be, and again, being here and having partners like yourself has been great. But yeah, EU is definitely a level up. It's definitely a little bit harder to do things within the EU, UK. And then, Hong Kong, I would say, is kind of in the middle right now. Hong Kong used to be the easiest, in my opinion. I think it's getting harder by the day. So it just all depends what you're selling to.
So if you had a magic wand and you can change a regulation, what would you change?
Yeah, I think some of the, and again, I'll kind of just stick in the U.S. here. Some of the scheme rules, I think, for foreigners are a little odd. To comply with certain scheme rules, you have to have like a physical office with utility bill or personal residence address in your name. And there's tax implications, right? I think a lot of guys that I work with that, they're trying to mitigate tax exposure, and I'm all for paying taxes and just making sure that, as long as you have audited, certified financials and everything checks out. I think some of the requirements where you have to have certain entity or operations, it's a little bit taxing, where, we have options now. And again, working with you, where you can get waivers for that stuff, right? As long as the business is credible and things kind of operate within guidelines, I think it's fine to make exceptions. But, there is some stuff that I think is a little much, where I think you could bend and shape these to be more innovative and encourage people to want to sell into the U.S. I was just saying, a lot of clients, like, they want to sell into the U.S. just because the wallet share there. I mean, everyone has a lot of money here. So a lot of clients will sell with a European entity because they're in Europe or anywhere else outside the U.S., for example. But they won't set up a U.S. entity. But you're going to lose like 20% of your clients to false declines.
Okay.
Because whenever that U.S. consumer that their issuing bank is interacting with a foreign entity, and like you just bought coffee down the road at Starbucks 5 minutes ago, they'll flag it as fraud, even though if you have money in the account.
Interesting.
But if it's a U.S. entity,
you get higher approval.
Rates.
Wow. So it's having it where you have that in one continuous flow in a single database. Is that an advantage for you or not?
Yeah, I mean, I think just kind of looking at it from like how we flow with each merchant, and like, the number of questions, like what's the problem you're trying to solve, right? And so if I'm understanding this correctly, like I look at it from like, where are you based, right? Like, where are you located, and then where are you selling, right? And then I also will like ask like what the long-term objective of the brand is, right? Because, I really try to filter this out, and we want to work with like true established, like, people that are in it for the long haul. And so if they have like an existing infrastructure set up, I'll examine that. And typically I'll just ask, what problem are you trying to solve, right? Like, are you trying to improve your fee structure, your auth rates? Like, what is it? And it typically is going to be like one of 3 to 4 things, which is lower fees, better performance, which is authorization rates. Reliability is huge, right? They don't want random funding hold stops, things pop up, and they want to speak to a human being. And then also just, am I in the right spot from a tax perspective as well? So there's different things with everybody, but the way I look at it is, I try to simplify as much as possible. If you're selling like from the EU to the US, or EU to, let's say, UK or Canada, your performance is automatically diminished because you're processing cross-border So if you're selling to the US, for example, and let's say I bought coffee 5 minutes ago, and then you run an ad and I pulled up on my phone, and let's say it's for some trinket or something, but it's a European entity. Well, if I just bought coffee 5 minutes ago here in LA, and then all of a sudden I'm interacting with an entity in Europe because that issuing bank is going to see me transacting with now a European entity, even if it's online, they may turn it down and I can have $1 million in the bank because they see it as fraud, right? And so they think it's fraud, and I'm running it through. I'm like, what's wrong? Now I got to call my bank. It's friction. It brings down your conversion rates. It's just a massive issue. So just by moving it to a US entity, which again is very simple to do, you can run it through a processor like PayCosmos and get the US entity acquiring set up, processing, route it through the US entity, and that turn down now will be an approval, right? So, and it also, your fee structure is less.
Now
So
I get it.
Yeah, you win across the board. So
Yeah.
you get lower fees, better performance, and a happy customer, right? Good converting customer.
So it's a proximity thing.
Right, exactly. Yep.
Very interesting. Very interesting.
Besides just converting mids from let's just say EU to US, how often when you're looking at corps that are already in the US, are you looking at optimizing their existing authorization rates?
Yes. Yeah, absolutely. I bucket this into 3 tiers. I have like our high risk providers. So there's several of those, and you have like, Maverick, Nexio, Payarc, EMS may be considered that. There's a lot of different processes out there that kind of take a little bit of everything. They're known for high risk and they're okay with it, right? They're kind of marketing to everybody in the high risk segment. The problem is sometimes the banks, when I run my card through a high risk like BIN or merchant provider, and I'm interacting with that merchant, they can turn the card down even again if I have cash in the bank. So I kind of have a section where it's like high risk merchant providers where we partner with them. And again, we love our partners, but we also are honest with our customers. We tell them exactly what they're getting. And you may see diminished auth rates with these providers, but you're approved because you're missing X, Y, and Z, or you're running high risk products, whatever it may be. Then I look at like PayFacs, whether it's Stripe or Shopify payments. I even put Airwallex kind of in that segment, which easy to onboard, not a lot of rigor, and you're kind of off and running. And then you have tier 1 providers. You have Agium, for example, where they're the acquiring bank and they're the processor and they're settling everything, and their auth rates and their performance is good because they're processing for Fortune 500 companies and they have a lot of low risk traffic on their accounts, right? So they can open up a little bit of high risk as well and bring those customers in because they have so much low risk, right? So you have Phoenix or Checkout.com, all these different providers, or WorldPay. But that's kind of how I look at it from a bucketing perspective. Like, not everybody's created equal, I would say. And again, that's where I would say, stand out with merchants because the numbers are changing all the time. Like, authorization rate performance changes day to day, week to week, month to month. And if you don't have somebody like us that's watching that, not every provider is going to have the same performance every month. It's always going to have some volatility.
Mm-hmm. And so you're not even going to try to put the higher risk accounts with your tier 1 processors because they're either not going to take it, or if they did take it, it's going to lower their authorization rates across the board.
Yeah, it's a little bit of a delicate dance. There's volume requirements for certain providers. There's certain, just overall like portfolio kind of review. When as a partner, I have to make sure I'm looking out for both sides of the fence, right? So I'm aggressive for the merchant, but I also am realistic, right? And I let them know, and it's something where we kind of have a graduation program as well, where if it's somebody that's, maybe they're smaller volume, for example, or higher risk, I let them prove themselves on a high risk account, and then we graduate them to a tier 1 account.
Okay. Mm-hmm. And as you work and navigate through these, relationships, as you have partnerships with multiple different processors, how do you pick who your partners are going to be? And then once you have those relationships established, picking which merchant should go where?
Yeah, I think, the way that I examine it is, it's people, right? I think looking at it from just how does that relationship look from a communication standpoint? being able to really understand our customers, right? We're very niche. We are specifically focused on e-com, and our vertical is from $100,000 a month. We'll work with startups too, but $100,000 a month in sales to, I would say top end is 10 million a month, right? Typically when they are past that, then I recommend they actually hire somebody full-time like myself to manage their full stack. So we are really honest with our segment and what we do, and we portray that, and we work with a lot of foreigners that have maybe an item, or they're missing certain requirements, but they have really good sales history on a foreign entity, right? So, it's a match, right? We got to make sure that we're matching that up, and I don't do setup with a processor just because they have another label. I really want to have an integrated partner, and again, we've done phenomenal together because you were able to understand my market segment. I understood exactly what you guys did, and we've been able to, work together. And I think just within a 10-minute conversation, we got 3 deals approved just by having open discussions. So that's the level of like partnership that I'm looking for. And again, we have, kind of a set of partners that kind of are our premier partners that we're always routing to, and they know not everything's fit for them, which is fine. And I think it's a great model where everyone's winning, right? It's not just one, it's multiple.
Well, I think it's clear that you add lots of value to your merchants, and make it very easy for your processing partners to onboard those accounts because the compliance and regulations are already taken care of. So
yeah.
It makes a lot of sense. I mean, you're there at the start to kind of help them clean house,
Mm-hmm.
and then to keep it clean. So you're a super trusted advisor, which is great. It's a great position to be in.
Yeah. I think that's there's the traditional agent model. I think we kind of look at ourselves as an upgraded version of that. Really more of a risk and operational agent, I would say.
Yeah.
Versus the traditional like sales agent.
So, yeah. So you guys came up with this idea, or is this something that you have competitors in the field that do similar things? Because I've not heard of this model before.
It's interesting. I joined my business partner. It was a little over 2 years ago. And then we formed the U.S. entity officially in January 2024. Bootstrap, not a dollar revenue on the entity. And then we've morphed it into a 10+ person team across both markets. And there's like competitors coming out of the woodwork. So it's interesting. Some have payment experience. I think 4 of the 5 really don't. So it's a little bit of it's interesting, right? Because it's not just setting up accounts. It's really, you have the post-approval process, and we have like very, I would say, managed mid-reviews post-approval, and making sure that everything still stays, within tolerance. So, again, we're leveling up though too. So we're seeing the competitors and kind of what they're doing, and we have a lot of things that we're really solutioning out here the next 6 months that are going to be really exciting for our customers.
It's great. It's great. Did you have anything else, Cosmos?
I guess just to wrap it up, hey, you guys have been amazing partners to work with. Always great, you and your team. Super nice, super respectful, very knowledgeable. We had a nice conversation last night where you told me a little bit behind the scenes of what you guys are building. And I think that that's very interesting and will be a huge value add for any merchants that can't have a full dedicated risk team. Being able to utilize your platform to be that risk team.
Right. Yeah. I'm excited. And with AI, and this is across every industry, whether it's payments, in any industry in general. AI, it's pretty amazing what you can do with this technology, and we're going to take full advantage. And I think everyone should. It's great because you can run really lean teams and really empower your customers to take kind of hold of certain things that they weren't able to access before.
When do you think that you'll roll that out?
I think, again, the goals, we're working aggressively on an AI engine right now. And then our goal is to kind of have everything really done and dusted within like a 90-day sprint.
Well, I'm super excited to see it.
Yeah, that would be great.
That's awesome. Well, you definitely have tapped into an exciting approach to the market, and it sounds to me like it's a very big opportunity. It's because e-commerce will continue to grow at a fast clip. I've seen some of the future models, and it's got year-over-year growth that's substantial. So anyway, well, that'll wrap up another episode of Linked to Podcast. Thanks for joining us, and we'll see you next time.